All right, let's jump right in. Bitcoin has been on an absolute roller coaster lately, and today we're going to cut through all the noise and figure out what the charts are really trying to tell us. So let's take a deep dive into the key signals that could shape Bitcoin's next big move. First up, the number that's on everyone's mind. Bitcoin is down about 16% from its all-time high. Now, that's a pretty significant drop, and yeah, it's shaken the market up a bit. And naturally, a drop like that leads to the one question everybody is asking. Where do we go from here? Is this the start of a much deeper correction, or is this the dip everyone's been waiting to buy? To figure that out, we've got to play detective and assemble the clues. So, our investigation is going to start with the biggest warning sign out there, the one that's really giving the bears all their confidence. You got to look at the long-term perspective first to see what's happening. And this is our first major clue. The higher time frame chart, the one that gives us that big picture 30,000-foot view, it's flashing a pretty serious bearish signal right now. This suggests the overall trend, at least for the moment, is not on the side of the bulls. Now here's where it gets really interesting, because we've seen this movie before. This setup looks almost identical to what happened back in 2021. You see, the price pushed above a super important level, got everyone excited, but then it failed and slammed right back down below it. That exact pattern kicked off a major downturn back then, and well, it's happening all over again right now. Okay, but it's not all doom and gloom, not even close. Just when that bearish case starts to look pretty solid, a completely different set of data starts telling a whole other story. So let's flip the script and look at the clues for a potential comeback. Before we get into the nitty-gritty, let's quickly talk about a key idea: on-chain support. The easiest way to think about it is like a historical price zone where a huge amount of Bitcoin was bought in the past. These zones act kind of like a safety net or a price floor. And check this out. The first major support level is sitting right around $105,000. This isn't just some random line on a chart. It's a super dense area of prior buying. A ton of people jumped in here, and that could create a really strong buffer to stop the price from falling much further. But wait, there's more. That's not the only safety net we're seeing. There's another one really close by, and this one is all about the behavior of the new folks in the market, the short-term holders. And that second floor is at about $103,000. Now, why is this number so important? It represents the average price that short-term holders paid for their Bitcoin. And get this, throughout this entire cycle, every time we've had a pullback, this exact level has held strong. It's been the line in the sand, and we're heading right back towards it. So we have these strong support levels building up. But on top of that, the market itself is basically screaming that the selling might be getting a little out of hand. We're entering what's known as an oversold state. So how can we tell? Well, one of the coolest ways is with something called the Stablecoin Supply Ratio, or SSR. It's a really powerful idea. It just compares the total value of Bitcoin to all the stablecoins sitting on the sidelines. Think of it as a gauge for how much cash is ready and waiting to buy. And right now, the momentum for that ratio is at just 26. As you can see, that is deep in what we call oversold territory. In plain English, it means there is a huge amount of buying power just sitting there, ready to go, compared to Bitcoin's current price. That's a ton of potential fuel for a market bottom. And our final clue for a comeback is a classic sign of a healthy reset. The data is showing that a lot of the excessive risky bets have been totally wiped out. The speculators, as they say, have been flushed. We can see this pretty clearly in the open interest, which is just the total number of bets in the derivatives market. When it's super high, it means speculation is running wild. But we've just seen a massive drop, which is something that often happens right near a market bottom. It's a sign of capitulation, that moment when the last of the sellers finally throw in the towel. Okay, so we've got this bearish long-term picture on one hand, but on the other, we've got all these on-chain signs screaming that a bottom is near. It's a real tug of war. And that brings us to the final piece of our puzzle, the one immediate thing that's holding everything back. And here's the catch. Here's the conflict. Despite all those positive signals building up underneath the surface, there is one major headwind we can't ignore. Right now, as we speak, people are actively selling their Bitcoin on the spot markets. And we can actually measure this using something called the Coinbase premium. It's simple, really. It just looks at the price difference between a spot exchange, like Coinbase, and a derivatives exchange. And when that premium is negative, which it is right now, it's a crystal clear sign that there's heavy selling pressure happening in the here and now.
So we have all these clues, and they're pointing in different directions, depending on the time frame you're looking at. Let's take a step back, put it all together, and see what the final picture looks like.
So here's the big takeaway, the whole story in a nutshell. The long-term chart looks bearish, but the near-term on-chain data suggests the market is deeply oversold and a bottom could be really close. And yet, what's happening right now is active downward pressure from sellers. It's a total contradiction. This whole situation really leads to a pretty clear two-step way of thinking about it. First, that active spot selling has got to calm down. That's the main thing holding the market back. And second, for anyone even thinking about making a move in a conflicted market like this, defining your risk is absolutely crucial. And that really leaves us with the final million-dollar question. All the underlying data is telling us that this sell-off is probably overdone and that a strong foundation is being built. But it all hinges on one thing. We've seen the clues, and now we just have to watch and see. When will the active selling pressure finally run out of steam? That's the key.